Now, energy prices retreated after those reports that Iran's oil fields are safe, at least for now. WTI and Brent crude both down by around 4%, as you can see there. The International Energy Agency is also predicting an oil surplus next year. The situation in the Middle East has had a limited effect on supplies, and weak demand in China in particular has also helped keep prices down. Helima Croft is the Global Head of Commodity Strategy at RBC Capital Markets, and she joins us now. Helima, there's clearly lots of angles here, but there is relief, palpable relief, yes. I think, that you can see in the market, that there appears to be some kind of agreement not to target oil infrastructure. What's in the price today in terms of geopolitical risk, first and foremost, and then we'll break it down to the other drivers?
Well, I would just say the geopolitical risk premium has evaporated with that Washington Post story. Now, what I think we don't know is what an Iranian response, will look like to what is the impending Israeli strike. I mean, the Washington Post article did indicate that a strike on military facilities is definitely on the table. You could potentially have senior Iranian personnel targeted. And so the question is, does Iran simply say, okay, like in April, this period of back and forth with Israel is over for now? Or do we see further escalation? Because I was in Washington last week, and even that Washington Post story indicated that the Israelis have not entirely taken off a strike on Iranian oil facilities off the table. It's just not in this current round that they are planning. So the question is, if you have escalation, is oil potentially caught in the crossfires? Or are we done with this phase? Are we moving to de-escalation when it comes to Iran, Israel? We simply don't know that yet.
Yeah, it's tough to trade on that. You can rule nothing out. What about US efforts, as an aside, to sanction shipping companies and trading houses involved in Iranian oil trade? I mean, I sort of watched the market move not at all when that was announced. There's sort of deep skepticism, I think, that will successfully limit their export operations at all. What do you make of those efforts?
Right. I mean, there is significant sanctions architecture in place. I mean, the White House has the tools at its disposal with secondary sanctions to significantly restrict the amount of oil Iran is allowed to export. And so I'm not sure market participants looking at the selective sanctions on ships and trading entities are going to think that really moves the needle. It's really a question about how much does Washington really want to enforce the maximum pressure sanctions from Trump that still remain on the book. So I think there is some skepticism because to date, the Biden administration has not seemed particularly inclined for a rigorous sanctions enforcement effort when it comes to oil. The Biden administration has been very focused on keeping oil on the market and keeping oil prices contained. Hence, a lot of the negotiations with Israel were around don't hit energy facilities. They are very worried about an oil price shock.
Yeah, no White House wants gas prices to spike 3 weeks out from a presidential election, bottom line. Into the mix now, we've got OPEC as well, cutting its global oil demand forecast. I think it was the third consecutive month that we saw that. There's also been a lack of clarity over Chinese stimulus and the timing and the scale of that too. And that's sort of all feeding into the story as well.
That's weighing on the market.
Yeah.
Absolutely. And the question about will OPEC begin returning barrels in December? There had been back and forth about whether Saudi Arabia was going to sunset its 1 million barrel a day unilateral cut faster than they planned to in June because of issues around compliance with Iraq and Kazakhstan. So the market has been very nervous about the demand outlook, about potential oversupply next year. And they really were caught off guard by this run up in prices because of renewed geopolitical concerns. So I think there are people in the market that want to wind the clock back a couple of weeks and say, we're done with this geopolitical story. But the question is, are we really done? I think we'll know in the next few days whether we can really say for now the Iran-Israel confrontation is in the rearview mirror.
Yeah, but not right now. Helima Croft, thank you so much. Great to have you on the show.
Thank you.